Hey folks, I have been promising you an update on Semiconductor, ticker symbol ON. Been promising this one for a while. One of the top performing semiconductor stocks year to date. Here it is for the duration of 2022, up over 5%. In a typical year, that's not so great, but when the NASDAQ composite is down 30%, 5% return, pretty good. Looking out over the last 5 years, wow, even better. The stock up over 260%. What is going on with On Semi? First, maybe just a little story here. So when I was a young, new investor after high school back in 2005, On Semi is one of the first stocks I ever bought. So I bought some back in here, made some money. Then, of course, a couple of years later, financial crisis hits. Bought some more in here in 08, made some money, lost some money. Ultimately, I ended up selling it here later on in 2009. Learned a lot of lessons during this period of time. So at that time, I knew what I was doing less than I do now. But what I know in hindsight is at that time, On Semiconductor was really a commoditized business. So they used to be part of Motorola. They were spun out and had an IPO in 2000. So it was kind of a new stock. It was a small business, especially compared to where they are today. They focused on power management chips, and it really just a commoditized business. On Semi is what's known as an IDM, an integrated device manufacturer. So some of their peers include Texas Instruments, NXP Semiconductors, ST Micro, a lot of companies in this space that both design and manufacture chips. But in the mid to late 2000s and really for most of the 2010s, On Semi was just a commoditized play. Low profit margins, really at the whim of the economy overall. I was fortunate to make any money whatsoever on this stock. But something's obviously changed since then, because On Semi stock performance in the last 5 years is pretty impressive. The first thing to take a look at here is the management team. So currently, On Semi CEO is Hussein El-Khoury. He's been there for a little over a year. And then the CFO, Thad Trent, coming up on 1 year anniversary in January. So these two gentlemen were the CEO and CFO of another legacy chip company called Cypress Semiconductor, which we owned here in the mid 2010s, owned it for a few years. And these two guys embarked on a fantastic turnaround story for Cypress, exiting old legacy lines of business, refocusing research and development on newer, higher end chips. And ultimately, Cypress got bought out for a nice little premium by Germany's leading integrated device manufacturing company, Infineon. That acquisition was finished up in the beginning of 2020, right as the pandemic was starting. They had a great run at Cypress, and now they're here at On Semi, and I see a lot of the same playbook that they used at Cypress now at work here at On. So I have pulled these slides from On Semi's Q3 2022 earnings presentation. This is a nice slide, just gives kind of an overview of what kind of chips the company designs and manufactures. And you can see here, this is an industrial chip company through and through. If you believe in industrial manufacturing, I think this is a top one to consider. And you'll see a lot of overlap here with Texas Instruments, again, also NXP. But On Semi, I think, is doing some unique things, especially to go after the electric vehicle market. So you see here in the automotive market, which makes up about 40% of their revenue, industrial end markets. Again, some of these dovetail with EVs, so like charging stations, solar power, wind power, power management, things that maybe go into managing industrial battery or industrial energy applications, and also industrial robotics, manufacturing. And some of this intelligent sensing wedge here, which is a pretty small part of the business overall, has to do with sensors. So again, things that help enable robotics, and then a lot of the new chips that are going into electric vehicles. So as cars go further down the technological path, a lot of these ADAS applications, advanced driver assist systems, and eventually self-driving vehicles, this is where On Semi plays. And they see a lot of synergy between these different markets. But they do give a nice breakdown here of some of the growth that they're seeing through the next 3 years or so. Remember, this is a manufacturing company, so they have a pretty high level of visibility into what their customers need. So their intelligent power segment is expected to drive the most growth, notching about 15% average growth through 2025. And then their intelligent sensing portfolio, which again, very small right now, but a nice 13% growth rate. And then this other at negative 6%, which doesn't look great, but remember the playbook that Alcori and Trent are applying here, exiting old legacy markets. A lot of these tend to be consumer markets. So think like communications, consumer electronics. They're exiting these as it makes sense to do so. They're getting out of it, including some of their underperforming fabs. So the company actually just announced here in early December that they sold one of their fabs in Japan that they think have more volatile profit margins. So why would someone in Japan want to buy this from On? Well, just like the US Chips Act in the US is here targeting chip manufacturing and trying to bring it back home and domesticate it. Similar thing happening in Japan, some funding going towards that. So I think On is able to exit some of these businesses at an opportune time that makes sense for them financially. And then just another alternative breakdown of their revenue that just kind of goes hand in hand with this slide here. Just an alternative look at where their sales are coming from. The automotive segment here, the big driver, already 40% of their revenue. And at the end of 3 years, automotive is probably going to be an even bigger share of revenue for On Semi, expected to grow an average 17% per year, industrial at 7%, and then other, again, a lot of this communications and consumer electronics down an average of 1% per year. But automotive, again, driven by electric vehicles. If you haven't watched the video that we made a few weeks ago on a company called Air Test Systems, they make testing equipment for silicon carbide wafers. So this is a newer semiconductor material where carbon is folded into the silicon, and it has properties that are attractive to EV makers because silicon carbide can handle the higher heat, the higher voltages involved with EVs and those big giant batteries and charging them up. On Semi has been really going after this market, ramping up its fabs with new silicon carbide equipment. They're probably one of the buyers of those air test systems equipment for testing those silicon carbide wafers. So this is an interesting company, strong growth, and they expect to have increasing profit margins in the coming years. So a nice dual tailwind for the stock. Now, maybe just a word of caution here, because after such a great run in 2022, it looks like the company has fantastic momentum in the coming 3 years. I'm being cautious here because I think this primary growth driver, electric vehicles, and the auto market overall really is going to hit a slowdown. It's going to tap the brakes in 2023. Now, this is something that On Semi is actually predicting. So their revenue grew 26% in Q3. In Q4, it's going to slow down to roughly 12%. That's management's year-over-year outlook for revenue growth. This kind of jives with some of the other industrial chip makers. Again, Texas Instruments, NXP, forecasting a pretty sizable slowdown to close out 2022, and that could bleed over into 2023. If there's a recession, the auto market could take a step back, including the EV market. At the very least, I think sales of EVs will slow down. So after such a great run, I'm being a little bit cautious here. So I'm not buying On Semi stock at this particular time. That being said, back to the ticker terminal here. I'm on the financial estimates page. You can see On Semi's revenue trending towards 23% growth this year. And the average analyst thinks that is going to take a 3% pullback in 2023. It's still early on, moving target here. Perhaps most of that decline happens in the first half of 2023, like other areas of the chip industry, like consumer electronics chips, smartphone chips. Most of the downturn that's currently in force right now expected to be finished by the first half of the year, and then maybe on returns to growth the second half. Maybe they don't decline at all. Maybe they just flatline a bit before revenue starts to take off again in 2024 and 2025. These are longer term estimates. These targets are going to move quite a bit. But I think the takeaway here is On thinks through the next few years, they're going to see strong growth, especially from the automotive market. Along the way, going down here to free cash flow, seeing a nice expected increase in free cash flow profit margins from currently high 17% range to low and then even higher 18% range and beyond. So again, dual tailwind, for On Semi, revenue growth and profit margins on the rise. This is a good thing to look for if you're looking for a long-term investment. Now, as for the reason why I'm not buying yet, based on a couple of assumptions, I'm using a discounted cash flow model. So On Semi has generated $4.63 in earnings per share over the last reported 12 months. I'm estimating the company grows its earnings per share at about a 10% annualized rate for the next 3 years before leveling off to a 3% growth rate thereafter. Using a discount rate of 11%, that's the assumption that gets us to the stock price today, somewhere in the mid $70 range. Shares currently trading for just under 19 times trailing 12-month earnings as of this recording. So those are the assumptions I'm looking at right now. Like I said, I think the stock is fairly valued. I would like to see what the outlook is for the first quarter of 2023. So I'm holding off a couple more months. I want a little bit more info on the outlook for 2023, and I want to see what Corey and Trent and the rest of the executive team have up their sleeves as they get their first real test from a macroeconomic perspective here at On anyways. I want to see how they handle it, what the plan is, and what the outlook is going into what I think could be a little bit of a rough patch. Now, I could be being way too myopic with this take on Semi right now. If you think the EV industry is going to be a fast-growing one, really for the duration of this decade, like a lot of estimates are pointing towards, maybe this is a stock that I should just be buying right now. And I may start doing so here within the next few months. If I do so, I'll be using a DCA method and maybe just buying a little bit here once a month, picking up a few shares, and then just letting the stock do its thing for the remainder of the 2020s. But that's my take on Semiconductor. Again, I think this is a really interesting company to take a look at, especially if you like industrial manufacturing and technology. A lot of great stuff happening in this sector of the economy. Check out the other videos on this, like the one on Taiwan Semiconductor and its announcement of a new chip fab, 2 new chip fabs, I should say, down in Arizona. Some really interesting things happening in this space, and On Semi could be a player worth keeping tabs on here. And of course, we appreciate you taking a few minutes of your time to spend with us here. You know, your time is valuable. Really appreciate it, and hope that these videos are helpful in your analysis of the chip industry and that they help you build a diversified portfolio of investments. If you do find them helpful, make sure to subscribe for more updates. We've got more coming on the chip industry later this week. Make sure you subscribe, hit the bell so you don't miss a video. And until next time, take care, everyone.